银行人真的是太不容易了。
Bank employees really have it tough. They have a target every month. It used to be about bringing in deposits, going door to door asking friends and family to help out. Hey, can you help me with some business? Can you bring in some deposits for me? I'm not going to meet my target this month. Please help. It was literally begging everyone one by one. Finally, after getting the deposits, the task would be done, only for a new target to come up. Oh, how things have changed. Before, they hoped to bring in more deposits, but now it's the opposite. Now, they're hoping to issue loans. Even if it's just for a few days, they'll cover the interest themselves just to meet the target. It's really not easy. And not to mention salary cuts. It feels like they're literally paying to work. How did it come to this?
In
Beijing, bank employees are nearly driven crazy. It's only July, and some banks have already met their annual deposit targets. But when it comes to loans, no matter what they try, they just can't get them out. My friend who works at a bank told me the pressure is overwhelming. Every day, it's about chasing clients. The main task now is to issue loans. Everyone is assigned loan targets, even loans with a 2.2% annual interest rate, where the bank pays the interest up front and the principal is paid later, aren't being taken. Here's the issue. People who have money don't need loans, and the business owners who do need loans can't get approved. Why do you say this is happening?
As the difference between deposit and loan rates continue to shrink, Chinese banks are facing increasing pressure on their profit margins. Smaller and medium-sized banks in particular are finding the traditional deposit loan models nearly unprofitable. As a result, many of these banks are struggling to stay afloat and are closing their doors. Available data indicates that by June 26, 210 small and medium-sized banks across China had been approved for dissolution or merger in 2025. On May 16 alone, 120 small banks in Inner Mongolia disappeared. The closure of over 210 banks translates to about 2,677 commercial bank branches shutting down across the country. For context, between 2022 and 2024, 43 small and medium-sized banks were shut down or merged in 2022, 77 in 2023, and 204 in 2024. In that year, a total of 2,483 commercial bank branches were permitted to exit the market. This means that the rate of closures this year is already double what it was last year. This trend isn't just limited to Chinese banks. Foreign banks are also speeding up their branches adjustment in China. In the first half of this year, data from the National Financial Regulatory Bureau shows that 32 branches of 9 foreign banks were approved for closure. Among them were HSBC China, Standard Chartered China, and Hang Seng China. HSBC China closed 13 branches, while Standard Chartered China shut down 5. Overall, the number of foreign banks closures in the first half of this year is significantly higher than the same period last year. Banks are facing unprecedented pressure in their operations. The drop in profits is directly affecting employees' pay, but these shrinking salaries are still expected to cover an increasing workload.
银行居然也沦为血汗工厂了，搁以前谁敢想啊？
It's unbelievable that banks have now become sweatshops. Who would have thought that this would happen? A bank worker fan of mine vented to me. He said that not only have salaries been slashed, but they're also doing everything they can to torture employees. He told me that even though their work hours start at 9 a.m., they're considered late if they clock in at 8:45. After work, they can't leave either. They have to attend these so-called supervision meetings, and if the targets aren't met, there are training sessions on weekends. It's truly unbelievable. The worst part is that these meetings and training sessions aren't even useful. They're just there to intimidate and humiliate, purely to pass the time and punish employees. They had 3 days off for the Dragon Boat Festival, but they couldn't even rest. Instead, employees were forced to go visit family and friends to bring in deposits. They have to report every day, and the targets they're given are impossible to meet. If they do meet the target, the bank wins. If they don't, the bank still wins by taking their money. And for those in the bottom 20%, they're sent to the so-called talent pool, which is really just a way to weed out employees. They're pressured into quitting. He said his colleague is crying every day. Many people are struggling. I thought it might be an isolated case, but When I saw a similar story today, if a branch doesn't meet its daily target, all employees have to stay late and even live stream their overtime. If they miss the target for 2 days in a row, the branch manager has to report the reasons in the group. If it goes on for 3 days, there's a so-called clearance drill. It's clear that it's not just the lower level employees under pressure, but even the branch managers are feeling it. But can you really solve the problem and improve performance by torturing employees? There are so many people working for the bank, so why are they this short on cash? If they need it to lay off staff, can't they do it openly? This situation has really served as a wake-up call for all workers. The once coveted bank jobs are now at rock bottom.
Bank tellers are under immense pressure. Each month, they are tasked with meeting deposit targets worth millions of yuan. The stress is so intense that it keeps them awake at night, leaving them feeling overwhelmed and on the brink.
在小城市里没有资源的银行柜员拉存款有多难？
In smaller cities, it's incredibly difficult for bank tellers with limited resources to bring in deposits. From the red opening, meaning strong performance in the first quarter of each year, to now having to compete for deposit month by month and week by week. If before bringing deposits felt like a trial, now it's turned into a pure hell. Here's why. In small fourth-tier cities, the density of banks is overwhelming. At my previous branch, within a 200-meter radius, there were 7 banks. Bank of China, Agricultural Bank of China, Industrial and Commercial Bank of China, China Construction Bank, Postal Savings, Zhongyuan Bank, and a rural credit union. Small cities tend to have a relatively stable population, so the customer base is limited. Bank tellers, unlike client managers, can't go out to expand their client base. They mostly just stay behind the counter all day. When a teller finally meets a customer with more money in their account, it turns out they already know someone else at the bank. Plus, the existing customer base is already mostly managed by client managers. It becomes even harder to attract new clients. But when targets are set, you have no choice but to push through. I ended up resorting to offering clients small benefits out of my own pocket. At first, I asked them to transfer money in at the end of the month and take it back out at the start of the next to boost the month-end deposit numbers. But the problem is the bank's pushing for more and more frequent deposits. Clients get repeatedly harassed, and in the end, they just stop answering the phone or responding to messages. Bank tellers are left with their meager salaries while carrying millions of yuan in deposit targets. Every time the pressure mounts, it's all about deposits and targets, leading to sleepless nights and self-doubt. The TikToker mentioned the term 开门红, meaning red or lucky opening. This term refers to achieving most of the year's target in the first quarter. It's an incredibly stressful period with immense responsibility. Every day, bank employees use every tactic they know to compete for increasingly scarce customer resources. Constant marketing efforts feel like tight strings that are always pulled taut, keeping employees in a constant state of readiness. When they fail to meet their goals, employees are often faced with the harsh reality of paying for the job. Currently, banks are unable to lend money while private companies are still struggling with financing difficulties. This remains a hot issue in 2025. TikToker user Dongge, who has worked in finance for 12 years, explains in a TikTok video posted on July 6.
Are banks doing well now? Honestly, things are probably even worse than you think. Why? Because they can't issue loans at all. Every day, employees are pressured to meet KPIs. Look at what it's doing to them. They're being crushed under the weight of it, and still loans aren't going out. Why? Is there a lack of customers? Honestly, there are plenty of customers who want loans. The problem is, there just aren't any good customers left. If you look at the people who want loans, they're all drowning in debt, trying to survive by borrowing from one place to pay another. It's a situation where banks are stuck. They'd like to issue loans, but they're too afraid to do so. Do they really not want to issue loans? Many loan managers probably do, because the pressure is coming from the top. But the real problem is that the system won't even let them pass the first hurdle. I've been dealing with banks myself, and the feedback from managers is the same. If you try to get a loan approved, you can't even get through the first step. The system shuts it down because of too many inquiries or overdue payments. What do you say they should do about this?
The user Dongge used Citibank as an example, noting that the foreign bank laid off 3,500 employees, with the key reason being the need to cut losses when profits can't be made. How bad is the situation? Banks are struggling to survive and there's no way out. Amidst all this, complaints from lower-level bank employees are growing louder. On June 10th, when a customer manager at a bank posted his performance sheet on social media, it shocked many in the industry. The red opening column showed 6,600 yuan, but the penalty was 14,091 yuan, leaving a final balance of negative 7,491 yuan. After working hard for an entire quarter, not only did he not get a bonus, but he also had to pay nearly 7,500 yuan from his own pocket. This screenshot quickly went viral, and the comment section was flooded with similar stories. Our branch deducts even more. We've been paying for 2 years now. The phrase cost reduction and efficiency improvement has become a looming threat for lower-level employees. With growth stagnating, cutting cost has become the go-to solution. Ironically, the once highly anticipated red opening bonus has now become a source of salary deductions. The distorted performance evaluation system has turned this red opening into a ruthless game. Banks continue to complicate and subdivide targets. If even one target is missed, penalties are severe. Even if other targets are exceeded, a customer manager at another joint stock bank completed 200% of his deposit target, but his bonus was wiped out because he missed his credit card target by 5 cards. What's even more suffocating is the prevalence of the worst performer penalty system. Those ranked lowest not only lose their year-end bonus, but may also face fines. Some banks like Ping An explicitly state that the bottom 5% of employees will lose their year-end bonus, and certain positions require performance clawback. Behind this meager performance sheet lies the brutal reality of the banking industry. As the economy continues to decline, the salary cuts and layoffs waves in the financial industry is picking up speed. Based on the 2023 annual report from various banks, executive compensation at Mingshen Bank dropped by 36.6%, at CMB by 36.8%, and at Ping An Bank by 42%. The worst hit banks saw nearly a 50% reduction in compensation. 2024 saw even worse results. Data shows that executive pay at A-share listed banks generally shrank last year. Among 42 banks, 33 saw a year-on-year decrease in total executive compensation, accounting for 78.5%. Among these, Changsha Bank experienced the largest drop at 82.4%. In addition to salary cuts, banks have also laid off many employees. In 2024, China's big four state-owned banks collectively laid off 67,000 employees, and other banks like Ping An and Shanghai Pudong Development Bank also joined the layoffs. Layoffs aren't limited to the banking sector. Security firms are also cutting staff in large numbers. The security industry, which already had a small workforce, saw over 10,000 employees laid off in the first half of 2024 alone. Salary cuts and layoffs are already difficult enough, but things can get even worse. For example, if a bank employee earned a performance bonus for a business deal, but that deal goes sour, the bank can claw back the bonus previously paid. This is the harsh reality of capitalism. When there's a hole, employees are expected to fill it. In the past, bank executives were often linked to the performance and compensation. In the pursuit of higher incomes, they tended to favor short-term risky investments. While these investments might bring in high returns in the short term, they left many risks for the bank in the long run. As a result, there's now a push to reserve wage recovery by taking back bonuses from executives responsible for creating risk losses. Currently, many banks are engaging in performance pay clawbacks. For example, China Merchants Bank, known as the Wage Recovery King, reclaimed 43.3 million yuan from 4,415 employees. Wage recovery isn't limited to China Merchants Bank. Last year, Bohai Bank recovered 17.6 million yuan from 370 employees with an average recovery of 47,500 yuan per person. Financial reports from various banks in China have pointed out that in 2024, Bank of China recovered 32.5 million yuan, while Zhejiang Commercial Bank recovered 30.3 million yuan. The decline in the banking industry and the resulting wave of closures are driven by multiple systemic pressures. Specifically, China's economic slowdown is a major factor, with weaker manufacturing exports and sluggish domestic demand. As credit risk rises, banks have become more cautious in lending, leading to reduced profitability. Additionally, high local government debt has increased pressure on the financial system, forcing banks to manage more potential risk under implicit guarantees. Another key factor is the collapse of the real estate market. With frequent defaults in the real estate sector, banks are unable to recover related loans, which has dragged down their assets' quality and led to a surge in bad debts. Rural banks have been the hardest hit. Typically, rural banks' main client are local businesses and individual entrepreneurs. In other words, the quality of a rural bank's customer is closely linked to the local economy. Bank profit largely comes from net interest margin. With net interest margins narrowing across the industry, it's already harder for small banks to attract deposits compared to larger banks. Deposits are growing more slowly, and finding high-quality loan clients is a challenge. To remain competitive, small banks often lower loan interest rates, further reducing their margins. Rural banks are small, and the default of a single large client or loan can cause a chain reaction, leading to a liquidity crisis or even bankruptcy. What concerns the Chinese government the most is that the collapse of poorly performing small banks could threaten social stability. In June 2022, a large-scale fraud at a rural bank in Henan led to the freezing of deposits for over 600,000 customers, with the amount involved reaching more than 40 billion yuan. As a result, depositors took to the streets to demand a resolution. The authorities responded by sending police to maintain order and arrest those protesting for their rights. The incident exposed the lack of regulatory oversight in rural banks' operations involving internet finance and third-party platforms, leading to the misappropriation of funds. On June 20th, 2025, 50 depositors from a Henan rural bank broke through blockades and protested in Zhengzhou at Ruyi Lake, calling attention to the authorities' seizure of deposits. Currently, the systemic risk in small banks remain unresolved. Rural banks are commonly facing low return on equity, high regional concentration, and insufficient regulation, meaning similar crises could arise again in the future. In response, Wang Zhishen, Secretary General of the China Asia Pacific Elite Exchange Association, stated that the restructuring or dissolution of these small and medium-sized banks is part of the Chinese government's attempt to deal with the overall financial crisis triggering by the real estate sector. He noted that this approach reflects the economic pressure building up, which has led to extreme measures to merge or dissolve these banks. Wang explained that the Chinese government's inability to resolve hidden local government debt, along with the real estate bubble and unpaid loans, are all contributing factors to the financial crisis. He added that the consolidation or dissolution of small and medium-sized banks is a slow form of euthanasia to deal with the situation.